Zebec Network just crossed 100,000 holders. That number is getting all the attention right now, and you'd expect a video like this to simply celebrate that milestone. But before you focus on the milestone, the thing that actually matters happened weeks before that number was reached. Something that didn't make headlines, something that fundamentally changes the framework for how you should be thinking about ZBCN in 2026. Let's break this down. First, let's be precise, because there's a comment surfacing in almost every 100K video right now, and it deserves a direct answer. 100,000 wallets does not equal 100,000 holders. That is technically accurate, and this channel doesn't skip past inconvenient facts. A wallet is just a wallet. Some are dormant. Some are exchange custody pools representing thousands of individual positions. Some are bots. So what does the 100K number actually tell us? It tells us that awareness is spreading across a broad enough network that even after you filter out the noise, the dust wallets, the exchange pools, the inactives, you still have a meaningful and growing base of intentional holders. And more importantly, it tells us when this is happening. Think about it. This milestone was reached in a macro environment that for most of 2024 and into 2025 treated small-cap DeFi infrastructure like it didn't exist. 100,000 holders in that environment is not a vanity metric, it is a retention signal. Now here's where things get interesting, because the story isn't just about holder growth, it's about the fundamental engine driving that growth. While the holder count was climbing toward its milestone, 3 separate, deeply significant infrastructure shifts happened inside the Zebec Network. And they happened simultaneously, creating a powerful confluence of catalysts. Let's break them down. Number 1. The SuperApp launched. To be clear, this is not a simple UI update or a fresh coat of paint. The Zebec SuperApp represents a complete consolidation of payroll streaming, cross-border payments, and programmable money management into a single, unified application layer. Think of it as the enterprise-grade operating system for value transfer. For the first time, an employer can onboard a new hire, stream their salary in real time, and manage corporate treasury operations, all inside one product, entirely on-chain. This eliminates the need for multiple vendors, complex bank integrations, and delayed settlement times. It's a seamless, efficient, and transparent financial stack. This isn't just another feature, it is a fundamental re-architecting of what Zebec is as a product, shifting it from a protocol into a comprehensive payfi platform. Number 2. Multi-chain expansion. Zebec's core infrastructure extended far beyond its original deployment on Solana, beginning a strategic integration across a diverse set of additional chains. This matters profoundly because the entire payfi thesis only works at enterprise scale, and true scale requires chain-agnostic infrastructure. By operating across multiple blockchains, Zebec abstracts away the complexity for its users. An enterprise doesn't need to care if its payment is settled on Ethereum, BNB chain, or any other network, they just need it to work. This multi-chain reality makes the network more resilient, more adaptable, and crucially, it decouples Zebec's growth from the fate of any single ecosystem's growth cycle. It becomes a universal layer for programmable money, wherever it resides. And, number 3, the final token, Unlock. As of Q1 2026, the ZBCN token has reached 100% circulating supply. Every single token that will ever exist is now in the open market. Now, to truly understand what's happening here, we need to differentiate between what that sounds like and what it actually means from a tokenomics perspective. The instinctive, reflexive reaction in crypto is more supply equals more sell pressure. And in a purely speculative token with no underlying utility, that assumption is usually correct. But Zebec is not a speculative token. It is a utility token with a confirmed automated buyback and burn mechanism that is already running, funded by real-world protocol fees. So let's connect the dots. When 100% of the supply is circulating, the risk of future token emissions or unlocks goes to 0. When a buyback is actively and perpetually removing tokens from that now-fixed supply, you no longer have an inflation risk. You have the structural mathematical conditions for a net deflationary model. The asset's supply is designed to shrink over time as platform usage grows. And that is a fundamentally different and much rarer asset class than what most people in this space are holding. It's a direct link between utility and value. So, What does an incumbent payment system do when faced with infrastructure that settles in real time, per second, programmably? It waits. It adapts slowly, and by the time it moves, the rails beneath it have already been built. That is the position Zebec is in right now. Let's run the math, not hopium. Supply-side arithmetic. ZBCN currently has approximately 10 billion tokens in circulation, all of them, no more coming. Now factor in this, 65,000 workers are currently streaming payroll through the USD1 integration. Every single one of those workers represents recurring, on-chain transaction volume. Not speculative demand, utility demand, the kind that generates protocol fees. Now layer in the buyback. Every time the protocol generates fees, a portion is used to permanently remove tokens from circulation. This is the compounding mechanism that the market hasn't priced in yet. Here is the asymmetry. At ZBCN's current market cap, the ratio between its utility footprint and its price remains significantly disconnected. That gap closes one of two ways. Either the utility contracts or the price adjusts upward to reflect the structural reality. The Q1 data says the utility is not contracting. Now let's look at what institutional money is actually doing around this asset. Because in capital markets, behavior matters more than narratives. Talk is cheap, but building infrastructure requires commitment, due diligence, and significant capital outlay. These are the signals that precede major market shifts. First, consider Anchorage Digital, one of the most selective, federally chartered digital asset banks in the United States. They added ZBCN to their custody infrastructure. To be clear, this is not a listing on a speculative retail exchange. This is institutional-grade validation from a regulated entity that serves the largest and most risk-averse players in finance. Adding an asset to this level of custody means it has passed rigorous technical, security, and compliance audits. It's a foundational step, enabling hedge funds, venture capital, and corporate treasuries to hold the asset securely and in a compliant manner. Next, Crypto.com made ZBCN eligible for IRA accounts. Think about what that means structurally. An IRA is a long-term, tax-advantaged retirement account. The investment horizon isn't days or weeks, it's years, even decades. Assets held in an IRA are positioned for long-term appreciation, not short-term trading. When ZBCN enters an IRA, it is structurally removed from the active circulating supply. This creates a powerful passive supply contraction at scale. A steady, underlying demand pressure that operates independently of daily market sentiment. And then there is Canton. The Canton Network, designed specifically for institutional DeFi, represents the type of permissioned but interoperable infrastructure that a product like Zebec needs to enter enterprise payroll and treasury markets. This isn't a theoretical partnership, it's a technical integration into a network built for giants like Microsoft, Deloitte, and Goldman Sachs. The signals coming out of that integration are not speculative, they are structural. The institutional layer is not just betting on Zebec, it is building with it, embedding its technology into the core financial plumbing of the future. So, here is the actual answer to the question in the title. What happens after 100,000 holders? The milestone itself does not cause the next move. What causes the next move is the convergence of the forces we just walked through, creating a powerful, undeniable shift in the asset's fundamentals. It starts with a fully deflationary supply, a mathematical certainty that scarcity will increase over time. This is amplified by an active buyback program, which doesn't just support the price, but actively removes tokens from circulation permanently. Then, you layer on institutional custody and IRA integration. This isn't just about big players buying in, it's about creating a structural supply lock, where a significant portion of the asset is held for the long term, insulated from short-term market volatility. Finally, the catalyst, a SuperApp that is, for the first time, capable of onboarding non-crypto native employers into on-chain payroll streaming. This isn't a hypothetical use case, it's the key to unlocking real-world, recurring and predictable demand. This powerful combination does not produce a fleeting pump, it produces a re-rate. A re-rate is when the market collectively updates its understanding of what an asset is and what it is worth. It's a fundamental repricing, not driven by hype or fleeting narratives, but by an overwhelming accumulation of structural evidence that can no longer be ignored. The market is forced to reevaluate its models because the old assumptions are proven obsolete. The community is already asking, who was in ZBCN from 20,000 holders, from 40,000, The infrastructure being built today suggests we may soon be looking back at 100,000 holders in precisely the same way, as a foundational entry point before the true scale became obvious. To understand Zebec's potential, we first need to clarify what it is and what it isn't. It is not a meme coin reliant on social media trends. It is not a speculative infrastructure play, betting on a future that may never arrive. It is the underlying settlement layer, the worker rails, the pipe beneath the payment. It's the quiet, essential plumbing that enables a new economy of value transfer. Institutional finance watches flows, not headlines, and the flows are beginning to move through these new rails. And in crypto, as in all disruptive technology, the biggest opportunities usually look confusing and are often dismissed right before they become common sense. If this breakdown was useful, subscribe, because this channel covers Zebec Network and the payfi space with the same level of rigor every single time. No hopium, just data, structure, and the signals worth watching. Now I want to hear from you. Drop it in the comments right now. Are you watching the holder count, or are you watching the institutional layer? Holder count or institutional layer? Tell me below.